今日华尔街时刻，我是主持人于超。本期中美贸易和大宗商品市场分析，我们来连线CME名交易员和分析师。Do you think the situation between China and the U.S. is going to be as a serious risk in near term, even if some experts think that this may well be regarded as more of a warning than actual substantive response leading to a trade war between two economic superpowers?
Yeah, I think that China and the U.S. being the number, one and two economies in the world, I think are going to find a way to cooperate and resolve this issue. A little bit of rhetoric going back and forth, that's to be expected. But at the end of the day, there's going to be some cooperation. I think there'll be some give back. I think what the U.S. really wants is into China on fair terms. And I think there'll be a way to do it. And I think it'll be, first, it's manifesting itself in the financial services area. So I don't believe it's going to be a full-blown trade war. It's in neither country's interest. So I think it's just a little posturing and I think a little more saber rattling. However, at the end of the day, I think it'll cooperate. And I do believe the pie is going to get bigger. And I am a little more optimistic and do not anticipate any type of trade war.
Right. Actually, China and the U.S. have quietly started negotiating to improve U.S. access to Chinese markets after a week filled with harsh words from both sides over Washington's threat to use tariffs to address trade imbalances. So far, how do you see the Chinese government's responses?
Yeah, the response, China's got a lot of, I think they have some leverage in the sense that I don't believe the exports to the U.S. are as important as they once were. I think that in China's backyard, in the Southeast Asia and the Asian region, and I think with the Belt and Road, I think there's a lot more influence and I think a lot more opportunity that China sees there. So I think they can flex certain muscles and have a little bit of leverage in that regard. And also, really, I think them allowing and giving concessions to come into China, because I think that's really what Donald Trump really is after, is a little more access into China. And I think that will I think play itself out. But China has a little more leverage, but nevertheless, I think both countries being the numbers 1 and 2 economies, both have equal leverage, and it's in both interests to get something done, and I do believe it will.
Next, let's switch to the commodity market. A burst of new enthusiasm hit the gold market last week as if heaven that investors bought the metal in a very big way. We see the spot prices rose above the 1350 in a heavy volume. Although the breakout is not new to the market, do you think the volume factor indicates a new higher trading range should be expected?
I believe a new higher trading range in gold will be seen. We've got to really clear this 1350 level, which is quite a bit of resistance. But once I think we make a breakout on the upside of this consolidation, that it seems like we've been in for 6 months. I think we're going to see a breakout to the upside, and I do think the gold is going, and as are real assets and commodities in general, I think we're going to see a nice sustained bull market in commodities, and I think gold is going to be one of the best performing commodities that I think we'll see.
Right, well, the sort of fears from trade war create an atmosphere of uncertainties favoring hard assets. Well, next, let's take a look at the commodity market for crude oil. Improving demand and flashing green lights from OPEC on extending quotas until 2019 are among a few other reasons. Whether do you think the oil is ready to climb to new highs? As most traders think that WTI reaching $70 per barrel in very near term. What's your prediction on that?
Yeah, I think $70, absolutely, maybe even higher. And why I say that is because this is clearly a demand-driven market, and you can see from gasoline sales in the U.S., I think the demand globally, and also the fact that the exploration and production and investment has really not occurred over the past several years. So I think that you are going to see demand take over, and I think the best place to probably be located as a producer is probably in Texas right now.
China's yuan-dominated crude oil futures launched this week in Shanghai with 15.4 million barrels of crude for delivery in September. Glencore, Telegraph, and Freeport Commodities were among the first to buy the new contract. But how to evaluate, that's the point. Do you think there's a need to interfere in the workings of the local commodity markets on any suspicions of a bubble coming?
I think that it's a major step, and I think it's going to go a little ways towards a goal of giving China a little more pricing power in a commodity that they're the largest importers in the world, that's crude oil. The contract itself is a sour crude, so I don't think it's any risk of displacing the WTI or Brent as a benchmark. But I also believe the yuan not being a convertible currency, I don't believe helps the cause for the contract. So on balance, I think it's a positive, but I think that the fact that the yuan is not convertible, I think is one of the impediments. And then also I think that the benchmarks are still going to be WTI and Brent priced in dollars, but I think it's a big step going forward.
好的，以上就是本期的金石华尔街时刻，感谢您的收看，我们下期再会。